Hi everyone, it's Evan here from the Trade Risk on Wednesday, February 8th with a midweek market recap video. We are going to cover all of the major markets, the current market environment, some sector analysis, and then finish off with some of those popular individual names. Let's jump right into the action today with the Sp500 Spy Etf. We finished higher on the day, just marginally so, 0.13% is how we finished up on the day today, and that was after a small gap to the downside and opened lower this morning and a close higher. So let's take a look at where we've come from. This week we've really gone nowhere. We started off Monday with this candle right here, opened right at 228, about 85, and we're up about 40 cents since that time. You can see lots of overlap in here. It's been 4 days in a really tight range. We are holding above this breakout level, 228 and a quarter, 228 flat, depending on how you want to draw it, but that was effectively the breakout level that we saw back from late January. We popped above it, fell back below it, then we popped above it again. So it's been a song and dance. There's no energy in this market right now. We continue to just move along sideways. There's some rotation. There are names that are moving, but the indices themselves, the SPY ETF anyway, or the Sp500, hasn't really got that much excitement behind it, doesn't have a whole lot of momentum behind it, and that can cause headaches if you are trying to aggressively trade breakouts and look for follow through with moves. Again, there are individual names and sectors that you can find, but in general, the S&P 500 hasn't been a very clean, strong momentum candidate recently. So weekly chart, let's take a look at that. Continues to just kind of grind higher, looks superb. We're right near all-time highs, and we're just inching ever so slightly higher each and every following week. If we go back down to the daily time frame, we talked about this level. I think this is a real tactical level that you can use as sort of a line in the sand, this 228 level, 228 and a quarter. Basically today's lows. Then you have this trend line, which is fast approaching underneath here, right around 227. So I think on the downside, if we started to breach or violently break below those levels, close below those levels, I think that would certainly get me to get defensive, get short, or just make adjustments accordingly until we can see those lows taken out, until we can see today's lows taken out. It looks like we're in store to retest these highs here, perhaps tomorrow or later this week, given how we closed today. Open red, closed on the highs. Again, the ranges are small, but it looks like we may want to tackle and retest these highs here into tomorrow and into next or the end of this week. That's what I'll be paying attention to. Now, a few things to note here is the IWM has been notably weak. This has been the underperformer. It's basically been the case now for quite a while, for the last few weeks, last couple of months. Again, zooming out, if you look at the big picture here, very warranted. It's understandable that this market, this group of stocks here are taking a breather after the very strong run they had at the end of 2016. Very orderly consolidation that we've seen so far, and we're still looking for clues for either a breakout or some type of a quicker breakdown from this trend line. Now, we very tactically were in this short, we're shorting IWM via TZA. The past few days, we covered the rest of it today, so we actually got short here on Monday, basically just getting real tactical, playing in these ranges, playing in this channel. Really would have liked to move closer to 133, but given the reversal on today's session, even though we did close down on the day, we did see a good stance here by the bulls. It's been 3 days down, so perhaps we can get a bounce here in the IWM, but we were short in here, covered some yesterday, covered the rest today, playing real tactical. And now that we're out of this short position, we do still have some longs on, so we're going to see, like I say, if the market can start to retest, particularly like in the S&P 500, start retesting these prior highs. If we look at the Qs, they have consecutively been making new all-time highs. That is the Nasdaq Composite. You can look there as well. New all-time closing high today. Same thing as yesterday. Same thing as last Friday. So this Nasdaq Composite continues to march higher. And what's interesting here is I've seen this spread between the Nasdaq Composite and the IWM, the small cap Russell, really kind of widen out and exceed over 1% intraday. In other words, the IWM was down, say, 1% while the Qs were flat, or the IWM has been down 75 basis points while the Qs have been up a quarter of a percent. That spread, you don't want to see that maintain itself or manifest itself for too long of a period, because that just generally speaks of, gives you some insight that something is kind of going on there under the hood. There should not be such a dislocation between the four major moving averages. You want to have them all sort of working kind of in harmony. They don't all have to be up the exact same amounts, but you don't want to have the Russell down 1% and the Qs just kind of doing all the work with that heavy lifting big cap tech names and some of the biotech names. And you've seen that actually happening. We've seen Apple, Facebook, Netflix, some of those big market cap weighted stocks really doing the heavy lifting here recently, and you don't want to see breadth get masked or just looking at the percentage basis of the moving averages kind of mask what's going on under the hood there. So it's something to pay attention to, not something I put a tremendous amount of weight on. Again, I'm still have some long exposure on. I'm going to see if we can start to resolve higher here in some of these major averages and sectors. But I am, noting that there has certainly been this very wide underperformance here in the IWM versus the Nasdaq 100 per se. So with that, let us get into some of the other major averages. The other major markets. We'll start with TLT here, which saw a nice move higher today, up 1.36%. We did originally, we've been talking about the same range here, basically the December lows to these January highs. It looks now like the bulls did effectively put in a higher low here over the past week or so. So it looks like we have maybe this little rising trend line, but this higher low to pay attention to now if we start to get into trouble and roll back over. So that's the level we'd want to see hold. So it looks like 119 and then back up here at 123, the same January highs. We're in motion to them. Let's see if we test these tomorrow, see if this prior level has some supply that's going to kick into TLT and perhaps can keep us contained within this sort of consolidation. But for now, bulls are running with it. Uptick in volume today, that looks encouraging. Let's see how they finish off the week. GLD also had a nice day today, back above 116. We know going back a few months, that has been an important level. The short-term trend here remains higher. If we go to the weekly chart, you can see we're now back above the 20-period EMA. The 8-period hasn't quite curled over, so you can see that the MACD is still in negative territory, but it's racing to go higher. So GLD getting that repair in place here. It's been kind of a V bottom off of the 2016 December lows here. And so far, so good. Bulls contain, bulls do hold this trend higher, and for stops and for trend alignment here, you could use these fast-moving averages, the 8 and 20 period. Silver, very similar situation, continues to look good after snapping this trend line and breaking above the 16 and a quarter level. Was up today, didn't quite close at the highs, but again, short-term trend does remain higher. And then finally, USO is a market we are now short. We shorted this yesterday, USO via DWT, that's the levered inverse ETF. What we were looking for in this short was yesterday's gap lower and hold near the lows and a break of this trend line. And remember, the USO chart here it doesn't completely reflect sort of the tightness in the price action. If you were to chart, say, the futures contract of WTI crude oil, there is a little bit of slippage here due to such prolonged sort of consolidation in this chart. But really what we're looking for was the breakout from, or the breakdown from this trend line and such a tight 10-week range. We do know that there is some support in here right around this 1105, 1110 level that coincides with $52 crude oil. There is also a rising 50-day moving average right around there. So a little bit, some speed bumps in the way. We put out a post yesterday detailing some more of the rationale why we're in this. Commitment of traders report also playing a role here. But for now, we are short USO, looking for continued rollover. Today did stage a bit of a stance here by the bulls, but we we want to see them prove it to us a little bit more. If they reclaim, say, this trend line or get back to the top end of this range, we'd be stepping aside of this trade and just taking the loss. Otherwise, we're going to stick with this for now. So that's USO. UNG continues to just hang out near this channel, the bottom end of this channel. Again, this isn't drawn to precision. This should just be looked at as a general area, general guide from the ultimate lows here from March of 2016. But if you were to extend that trend line all the way through the November lows, you can see we're more or less at the bottom end of this channel here, and we want to see if it can try and hang in around here. It's just a little bit too messy for me, so I'm not touching this. But you can see it's had a tough go for 2017, and the bulls have a lot to prove here in natural gas. So that is those are some of the major markets I wanted to cover. Let's get into some of the sectors now. XLK. So, clear leader here, all-time closing high. It's been closing at all-time highs almost every other consecutive day. So XLK continues to look good, continues to show strength. XLU is a new node, a new sort of breakout move today. We've talked about this $49 level before. It's been bumping up against here for all of 2017 and towards the end of 2016. But today we're finally getting the strongest close, the highest close that it's had, going all the way back to October, and if it did take out this, to October, and if it takes out this high here, then you got to go back even further. So XLU getting a bit of a move here. If we do continue to see yields pull back, then it's certainly possible that we continue to see more rotation into XLU. So that one was a strong mover today. Staples as well, continuing to move higher here ever since kind of bottoming out and breaking this trend line here back in mid-January. Also XLY with a bit of a turnaround here. Discretionary ETF, you can see it's been pulling back pretty orderly, and today it's trying to get going a little bit, up 62 basis points, so a little bit of outperformance there. See if that can continue. And energy getting a little bit of a hammer here. This has been in this slide lower ever since the beginning or mid-December of 2016, and today you're seeing a little bit of a reversal here. Let's see if that materializes to any follow-through for the rest of this week. And I think that pretty much sums up the major sectors that I want to discuss. Let's look at some of the individual names now. Apple has been a runaway story here since its earnings report. Had this earnings gap up of about 6%. It's been moving higher ever since. It looks like it has a date with all-time highs. It's not far from it at all now, just about a point or so away. We'll see if there's if there's any memory here, if there's any previous supply at these prior all-time highs. This was back in early to mid 2015, so a lot of that supply could have been worn out throughout this consolidation and pullback over the past year and a half or so. So perhaps we don't see that much resistance here, and maybe Apple continues to move higher. And just becomes a chase effect stock. We'll have to see. $690 billion market cap, pretty impressive there in Apple. Going to Facebook here, closing at new all-time highs. Also now, getting back to recovering the sort of 3-day pullback here after its earnings report. This was earnings day. It was down almost 2% that day, and then that was about it. That was the extent of it. Basically reversed, and now it's very quickly closing at all-time highs again. So I like Facebook. I think the prospects of potentially just kind of running and grinding away to new all-time highs looks good there for Facebook, so something I'm paying attention to. Tesla also fits that same bill. Has just continued to just move higher, really without much turbulence in its way. It's been had a couple of single 1 or 2 day pullbacks, but otherwise it's been riding the 8-period EMA all the way up. If we were to zoom out, you can see very quickly coming back to the all-time highs, and ultimately a place where we've failed multiple times in the past 2 or 3 years, up here right around 275, 280. The most recent top out in early 2016 was right at 269.34, so we're only about 6 or 7 points away from that. Perhaps that is the next place Tesla will encounter some supply. Netflix also closing at new all-time highs. So again, you're seeing a theme here. These big, large cap tech names are moving towards all-time highs or in strong trends higher. That's been helping kind of prop up this market. It's been helping certainly the Qs make those consecutive all-time highs. Netflix, again, new all-time closing highs. The real break was yesterday. And then we saw more follow through today. Looks great here. Another one that could just continue to grind higher. Doesn't have a whole lot of volatility in here. Just riding that 8-period EMA up. Something I like, something I'm paying attention to. And then finally, Alibaba. We talked about this as a trade idea a couple of times. This has pulled back after its earnings report, which I believe was back here on the 24th. Had a little bit of a push higher. Then it consolidated, pulled back, and then caught up. Let the moving averages caught up with it. And then today again was sort of that breakout trend resumption higher. So another one that I like, no position in it, but I do like it there. A little bit of an uptick on volume today as well. So that is the recap for today. I hope you guys had a great trading day. Thanks for watching. If you haven't subscribed to our channel, please do so, bottom right hand corner. Again, thanks for watching, and I will talk to you soon.